Okay, so I went through, we had a case study for, actually this was an attorney client of ours who was a partner, but full, actually not a partner, but I guess a non-equity partner. So was still getting all compensation W-2. So we had talked through and said, okay, well, is there any way you can become a non-equity partner that, maybe set up an entity like an S Corp and they could become an ownership interest, or they would, and get paid instead of W-2, get paid directly to your corporation. And again, I'm not talking about the legal side of things. We asked those questions. Our client went to the law firm and said, hey, can you pay me in this way? They talked to legal, checked all the boxes. And so they said, okay, this client then set up an S Corp. And by having their own S Corp, they had a lot more control of how they would deal with their own payroll, how they would deal with all the retirement plan funding, and also utilizing some tax strategies. And so a few things we went through, and we had these case studies as like 2-pagers. But basically the long and short of it, by making this change from a W-2 employee to an S Corp that is getting paid directly from the firm, they were able to implement the Augusta rule, because he was a big believer of, spending that time to work on the business. He also, his spouse was handling a lot of the administrative. He's an attorney, so she was handling a lot of the administrative requirements, the bookkeeping, and a lot of things that he didn't have time to spend on. It was not a good use of his time, and she was on payroll. Children that were helping out that were in high school, they were added to payroll, and then they also got the benefit of the pass-through entity tax deduction, because in the state of California, the taxes that you pay to California are capped. The deduction at the federal level is capped at $10,000. So because his pass-through entity, because his income was so high, his pass-through entity tax payment to the state of California from the S Corp was $135,000. This saved him over $50,000 in federal taxes. And so pretty powerful. This was just a 1-year example. And so the whole point of this is not that, hey, we're going to do this for everybody. Clearly, when people come in, everyone's situation is different. But what we find too often is there's not enough purpose around making decisions, that people just kind of just say, hey, this is how things are. And they don't challenge, well, this is how things are, but how should they be? Is there a better way of doing it? And that's really what we're focused on whenever we have, especially a new client coming in, is making sure we're trying to optimize it. And I would say most of the time we can add some benefit. This was obviously an extreme example, which is, why we're showcasing it here. But this is obviously a healthy example to show what is possible if you're more purposeful and thoughtful about your planning.